Assalamualaikum, selamat sejahtera. I'm Puan Nur Aniza. So today we meet again on the topic of statement of cash flow. So it's the continuation from the previous part. So today we're going to look on part 4, that is on operating activities. Okay, so this is the same learning outcome. So we have already looked at the previous section, okay, from learning outcome number 1 to number 3. So now we're going to look into the learning outcome of number 4. Okay, so it's going to be in 2 slides. Okay, so this will be the last part. Okay, so the operating activity, the cash flow statement. So this is the last part of the activities that I'm going to elaborate. So the operating activities is actually one of the important parts, whereby there will be 2 types of methods that can be used in presenting the operating activities. So whether are you using the indirect methods or the direct method. Okay, so what is actually the definition of operating activities? So we in accounting, item indicating the money a company brings in from ongoing regular business activities, such as manufacturing and selling goods or providing a service is called the operation activities. Okay, so cash flow from operating activities will not or does not include any long-term capital or investment costs, but it does include earnings before interest and taxes plus depreciation minus tax. So these are the items that are included in the cash flow of operating activities. So in the operating activities, usually the cash flow reported are for activities under current assets and also current liabilities. So the operating activities is actually the most important category. This is where you can see the creation of revenues, expenses, gains and losses. So apart from reporting on the current asset and current liabilities, under the operating activities, revenues, expenses are also reported. And you can also see the gains and losses from the purchase or disposal of assets under the operating activities. So usually it is a transaction that make up net income, and it affects current asset and current liabilities on the balance sheet. Okay, so these are some of the common inflows from operating activities that can be included as revenues under the operating activities. Any cash sales received from customers, and then if there is any collections or this is accounts receivable on credit sales, prior accounts receivables that are collected. So collections on credit sales. If there are any collections on interest from borrowers and any dividends received, so these are also revenues. So maybe you have borrowed out a loan to a borrower or a third party. So when you collect interest on the loan that you have that you borrowed them, so this is actually an interest revenue. And if you have any investment in other companies or you made any investment in the subsidiaries, so any payment, so you have a share in the company, so any payment on the dividends that are received by the shares of that company will be the dividends that you receive because you have an investment there. So this is also treated as a part of revenue under operating activities. Okay, so if there is any other receipts from other operating activities, such as rent revenue, okay, so maybe you have some premises, so you rent it out, so you have some revenues from rent. So these are other revenues received from other operating activities. And also sales of trading securities. So this depends on its nature and purpose. Okay, so this one, okay, so the last one usually depends on its nature and purpose. Okay. So what are the outflows? Okay, so I should change the title here. So it should be outflows. Okay, the more common outflows from operating activities will include all the expenses that are paid out. Okay, for the operation activities. For instance, salaries and wages paid to employees. Okay, but this must be in cash. Okay, so you're going to consider only the cash payment. Okay, if you have any accruals in salaries and wages, it's not calculated as an outflow for operating activities. So you're going to look at the actual amount that have been paid or cash paid out. Okay, so any cash payment made to suppliers for goods and services. Okay, so it's not maybe uh some accounts payables that you have settled, or maybe you have made a cash purchase from supplier for goods and services. Okay, then if you have any if you lend, okay, from you have borrowings from other parties, okay, and you have to furnish interest to them, so any cash payment for the interest on your borrowings will be treated as outflows under operating activities. Okay, other payments would also include payments of taxes to the government, and miscellaneous or other operating expenses that are paid by cash. Okay, and this one, depending on its nature and purpose, the purchase of trading securities could also be included under operating activity. So the last one will depend on the nature and purpose. Okay, so these are all the list of the inflows and outflows under operating activities. So inflows are usually revenues, okay, from operation and also non-operation activities, and it could also include interest and dividend collections. Okay, so for outflows, these are payment for operation or expenses. Okay, and also will include the interest and tax paid. Okay, to lenders and also to government. This is an analysis of the effects of operating transaction on cash. So if you are given, okay, information on the business transaction that has occurred, so you have to analyze whether it involve cash or it does not involve any cash movement. Okay, so if there is any cash involving any cash movement, okay, so the effect would be an increase or decrease to the cash. So whether it's an outflow or it's an inflow. But if it does not involve any movement of cash, so maybe the transactions only involve um, credits, okay, credits given out or credits taken, okay, for instance on sales of goods, okay, or you just recognizing the cost of goods, or you purchase inventory on credits, or you accrue, okay, expenses or revenues are accrued, so it does not have any effect on the cash flow, okay, because there is actually no exchange of cash. Okay, so these are the remaining list of type of transaction and the types of effect. Okay, so you can see here when there's accrual, so it means that there is no exchange of cash. So accrual does not involve any exchange of cash. You just have to recognize the accruals because you have to match with the period, okay, when the expenses occur. Okay, so prepayment also are not does not involve any recognition of or recording the prepayments, also does not affect the movement of cash. Okay, so it does not have any effect on the cash flow statement. Okay, so there will be two formats for the operating activities. Okay, this is actually how the operating activities can be presented, okay, in the cash flow statement. Either it's using the indirect method or it's using the direct method. So for each approach, uh, the calculation and the items are actually the same, but how you treat them in and present them in the statement, okay, will depends on its format. Okay, so both the direct and indirect methods will actually give the same results. Okay, so whatever method that you use, okay, the net cash change that you want to find will be the same. Okay, so both will produce the same results, and both are under the under the GAAP. Okay, so don't worry about that, because whichever the method that you use, okay, the results will be the same. Okay, so for indirect method, usually it starts with reconciling net income to net cash that is provided by the operating activity. So when you prepare the indirect method, you need to have information of the net income that you can take or you can find from the income statement. And then you have to do reconciliation of other items that involve the cash movement, okay, taken from the uh, income statement, and also the differences of activities between the comprehensive balance sheet. Okay, and there are certain items that are included, okay, from the income statement and also from the balance sheet. Okay, so the essence of the indirect approach is actually the conversion of net income to net cash flow from operating activities. So here you are trying to change from the accrual method in reporting to the cash methods in reporting the operating activities. Okay, so whereas for the direct method, it reports all cash receipts and cash payments from operating activities. Here in the direct methods, it will actually involve calculation, okay, using formulas to determine, okay, the individual cash receipt of each activities. Okay, so for each reporting of cash receipts and cash payment, okay, you will have to use a formula to determine, okay, the amount of cash that goes out and also comes in. Okay, so for indirect method, net income or loss will be adjusted for accruals such as accounts receivable and payable, and for non-cash expenses such as depreciation. So under each method, under both methods, okay, depreciation is not going to be considered or included in the calculation, because depreciation is actually an expense that does not involve any transfer of cash, or there's no cash movement. Okay, so you're just recognizing the amount, reducing the usage, okay, of the assets. Okay. So reconciliation of the accrual based and cash based accounting is under indirect method. Okay, so for direct method, income statement items will be converted to cash flows individually. So for the direct method, you're actually converting, okay, the accruals also to the cash basis accounting, but you are going to convert it individually using certain formulas. Right? Okay, so this is actually the same explanation. Okay, and the direct and indirect methods differs only in the cash flows from operating activities section of the statement of cash flows. Okay, but the two methods have no effect on investing or financial activities. So the direct and indirect methods will only be used, okay, in reporting the operating activities, and it does not have any effect on investing or financing activities. The investing and financing activities are not reported according to indirect or direct method. Okay, they are reported as what I have already explained in the previous parts of the cash flow of the previous PowerPoint parts for the cash flow statement. Okay, so this is the format for the two methods. Okay, indirect method. Okay, you will start with the net income and then you will do adjustment. So adjustment is for the reconciliation, okay, of the item listed in the uh, the item listed in the income statement, okay, so that you can calculate, okay, the net cash provided by operating activities. Okay, so this should not be included here. Depreciation should not be included here, okay? Okay, so for direct methods, collection from customers, okay, you start with collection from customers, you will start with the inflows and then you will minus the expenses, okay? So for instance, payments to suppliers, etc. Okay, so these are the differences in the direct methods and indirect method. Okay, the amount that the net cash amount will actually be the same despite of which method is adopted. Okay, so this is only the summary for each method. Okay, and this is the flow concept. Okay, so you will have to eliminate non-cash revenues and non-cash charges before you can determine in the cash flow, okay, for the operating activities. Okay, so these are the basis of the conversion from accrual to cash flow statement. So for the direct methods, the inflows and outflows are listed as below, okay, as listed as in the diagram. Okay, and that's the end of this topic. Okay, so thank you. We're going to meet in the other part, okay, after this. Okay, thank you. Assalamualaikum.